What's up, guys? Welcome back to DCA. So when you look at Bitcoin or any asset, how do you come up with a price range where you think it might be able to get to? Do you just listen to other people's opinions? Do you just look at the prior price and take a guess? So we're going to throw that all out of the window today. We're going to look at the numbers. We're going to use math alone to establish a framework of where Bitcoin may be able to go to in the future. Forget all the opinions, forget all the junk out there. Let's dive into the numbers. So in a prior episode, we talked about realized price. And we said that the realized price gives you a strong estimate of where the average Bitcoin is being held on the network. It's not a perfect estimate because there are certain types of transactions that, simply put, Glassnode is not able to track perfectly anyway. They are able to use various techniques to estimate this level. So I just want to be clear about this. It's not the exact level, but it does give you a very strong indication of, in general, where this average Bitcoin price is being held at. If someone, let's say, buys a Bitcoin, somewhere here at $1,000 in the middle of 2017, it's tracked as one Bitcoin has been bought for $1,000. And then let's say that when the price got up to, let's say, $60,000, they sell that Bitcoin. So that Bitcoin is, instead of being marked as being $1,000, now it's marked as a $60,000 Bitcoin. All right. So this gives you an estimate of how much money is actually into the network. Like we said, it's not a perfect estimate. It won't be this exact number. It's likely going to be a very close estimate as to where the actual price is. So why does this matter? When you're in the setting of a capitulation, knowing where your realized price is going to identify for you, generally speaking, where a good estimate for the bottom may be. Because as long as nothing fundamentally changes for the value of Bitcoin or the demand for Bitcoin, over the long term, not these short-term contractions and expansions like we see in the setting of a normal market cycle. But as long as nothing changes fundamentally for the demand, this will identify for you roughly where it's going to be, simply put, difficult for the price to move much farther down from. Because if you're a long-term holder and you have Bitcoin at this level, very likely you're not going to sell your Bitcoin. Long-term holders do not like to sell their Bitcoin at a loss. Okay. So what this is showing is where the supply and demand curves will become in disequilibrium. In other words, there is not enough supply to meet the demand down at these levels. Because in general, retail will be out of the market. Retail's gone, but the long-term holders are going to want to acquire more. So they are going to attempt to acquire from those who are capitulating down at these levels, okay? And simply put, there aren't many people who will be putting their Bitcoin onto the market at these levels because in general, all that is left are the long-term holders. If you look historically here, you see once we come down to this level, we start to meet some resistance. Then there is some capitulation. We do fall below it. And recall, we're looking at this, after the 2014 market cycle. We meet resistance at this realized price level. It does fall through due to capitulation. But then from there, that's it. It bottoms out and we start to go up. And in fact, that is how our next market cycle starts. Same type of thing. We form this base right above the realized price level. Then there's just a massive capitulation. We go from $6,300 all the way down to $3,200. Just like we saw in 2014 and 2015, recall, after the capitulation, we level out and then we start to go up. That's what we saw here as well in 2019. We have the capitulation, we level out for a bit, and then we go up because we're below that level where the long-term holders are simply not willing to sell. And, if you go to 2020, we saw the same thing with the COVID capitulation event. There's a massive capitulation, but we were already in a strong moving market, and it just got eaten up immediately by the long-term holders, and we were able to go up from there. Now, one thing that's important to notice how even in the setting of a bear market, okay, even in a bear market, we typically don't see this level drop very much. it stays fairly static, okay? It does go down some as you wear into a bear market, but in general, it stays fairly close to where it's at. So you can start to think in your head of this as a, almost a line of last resort. Now notice it does typically go below this level some, and that's simply because of, the mass panic, because it's not very easy to hold your will when, when the price is just plummeting, and it always looks like it's plummeting. So this is why the individuals that are able to maintain their resolution and, have the fortitude to stick through these levels, that's why they are the ones who come out the other side, and they're the ones that you hear about who have, made millions of dollars off relatively small amounts of money through these market cycles. All right. So what I want to show you today though is this. Okay, so this is the log regression curve for the realized price. So these are showing you where we're at right before the market cycle parabolic phase and right after the parabolic phase. Because as you can see here, the way that the realized price typically works, it goes flat, and then right before we start to go into the parabolic phase of the cycle, it starts to really ramp up and then it shoots up rapidly. So this is the logarithmic regression curve, which is basically just a way to show, how the trend has been occurring thus far. And as we showed the other day with regards to the price, the logarithmic regression curve for Bitcoin's actual price has been very consistent over time and has been very accurate. Even if you only look at older prices, it's been very accurate in predicting where we may be in the future. So we're going to look at this here and we're going to forecast this out to show where the bottom may be at various points in time in the future, as well as where we may expect the top to be. Okay, so in blue, we have the realized price, and in orange, we have the actual price. Okay, so the orange dots are the actual price, blue is the realized price. So in green, we're simply looking at the lower estimate log regression. So this shows you, at any point in time where you may expect the lower band of the average price of Bitcoin being held at. Okay. Notice that there are times when it goes above this, but in general, it typically comes down back to this line in the setting of a bear market. It came down then here in 2013, early 2013, just before the parabolic phase of the cycle. And that's kind of what we expect to see. Then we came down to it right here in 2016, right before we went into our parabolic phase of the cycle. Then we came down in 2020 and hit it right here in November. And sure enough, that's right before the parabolic phase of the cycle. So each time, then the realized price shoots up along with the true price of Bitcoin. So we can then also look at the upper limits, and we can estimate where the upper limit will be of the realized price. So what that means is the upper limit of where the average price of Bitcoin being held is. Okay, and you can see that we come up to this line at each market cycle peak. All right, right around the market cycle peak, we come up and meet this line. So if we just look right here, the average cost was around $300, or the average price that people were holding Bitcoin at, while in fact, the cost at the market cycle peak was around $1,200. So it's when you get above this line that the market is typically becoming significantly overheated. And what you can see is that at the moment, the price is significantly above the average price, which recall we said is down at around $24,000 right now. Okay. So we're going to look at this metric and we're going to use this as a framework to determine where the price may be able to go to in the future, as well as where might the bottom price be. Because recall, in general, Bitcoin's actual price typically comes down and approaches this lower level. So we're going to use this data, not our opinions. We're going to use data and forecasting in order to identify where the bottom of the next cycle may occur, as well as where a potential peak for the next cycle may occur. And we're going to combine this with the logarithmic regression analysis of the actual Bitcoin price to see if we can come up with a framework for identifying where these locations may be. Okay, guys. So this is the same thing we were just looking at in TradingView. You can see that essentially over time, these are moving up in tandem with one another. And if we just zoom in here, what we can see is, where's the bottom and where's the top right now? So the bottom is at $11,000 and the top is at around $44,700. Okay. So just because we're at $11,000 right now on our lower band of the regression curve doesn't mean that that's where we'll meet that level at. In fact, if you look, where have we met it in the past? And we hit our market cycle peak in November of 2013, and we didn't come down to this level, this lower regression band, all the way until August of 2015. Okay. So a year and a half later, or almost 2 years later. So at that time, the regression curve was at around $30, but we didn't meet the regression curve until we got up to $180. So it had nearly went up 5 times before we finally hit the regression curve. So in 2017, late 2017, we were at $1,100 when we made our peak. And we didn't actually come down and approach the regression band until right here at around $2,100. We didn't actually initially get all the way down to the regression band in the first part of the capitulation of 2018. We, in fact, didn't come down to it until right here in the COVID capitulation event when it had risen all the way up to $4,000. Okay, so simply the fact that we're at $11,000 right now, we're far above it still. So the past has demonstrated to us that it typically takes a significant amount of time to get back down to it. All right. And quite frankly, without the COVID capitulation event, I actually don't think we would have ever got down to this lower band of the regression curve, because typically you don't actually get there. Here we had a wick down to it. Here we stayed significantly above it. And in each instance, it's happened after, approach the closest that you get to this regression band. It happens typically at least months, if not a year after you hit a market cycle peak. Okay. So what that's saying is, there is room to go down, but I don't think $11,000, certainly I don't believe that $11,000 is where we're going to get to. Now, okay, well, with that said, where might this be in the future then? So we can actually run this regression forward and forecast where it may be. And what we'll do, we'll remove this, we'll add a forecast bar, and we'll look 4 years ahead, okay? 4 years ahead, because that will put us after our next halving, all right? Well after our next halving. And if you just then zoom out, we can see, this would be the general expectation going forward for a bare minimum price. So if this took from here about a year, let's say in the past it's taken a year or more to approach this bar. So let's say just a year. So that would put us at November of 2022. All right. And November of 2022 would have this bar at around $16,000. Okay. But in general, it's taken on average longer than a year. So let's say about a year and a half. So at about a year and a half, you would be all the way out to around $20,000. Okay. So at a year and a half, this minimum level is $20,000. Now, what if you go just 4 years ahead and to the next market cycle? So where we would expect to be at the level of the next market cycle, a minimum level at the next market cycle. And there you can see it's around $58,000. And just remember that this bottom level, this white bar, we don't typically actually go down to that level. It's simply a level of last resort in the setting of a massive capitulation event that typically only happens for a short amount of time. In fact, the times where we have got to this level, we spent, no more than a single day there here. In fact, within a day, we had gone from $180 up to $240. Okay. And then again, in the COVID capitulation event, it was no more than a wick down to this level at $4,500. And then we were instantly within just, a few weeks back up to $9,000. So this level, if you hear $10,000 and you immediately brush it off as being impossible, it's not. It simply isn't. You can come down to these levels, and we have at times in the past. But like I said, these are levels of last resort. They're the bottom of the regression band. It does not get lower than this. And the times that we have come down to this level, it's only been for a day at a time. So it's a very rare event. 2 days out of, going on 5,000 data points, two out of approaching 5,000 have actually come down to this regression level. All right. Now on the upper level, so you can see that typically after we reach an upper level, it does go higher, but it's merely a parabolic phase. And it doesn't usually last for more than a few months. So from November 2013 through around April of 2014, and then in November of 2017 through approximately March of 2018. And then there's usually a secondary bump above it in, what ends up being a failed breakout. And we've seen this during this cycle, we've actually stayed above this level longer than you may expect. We've been above this level from January all the way through June of 2021. And then we got back above for a, not an insignificant amount of time. So from July of 2021 until here in June of 2022. Now, one thing I will say is once you go through, once you fall through and look at what has happened every cycle, you fell through right here and got back above. You fell through right here and got back above. You fell through right here, you got back above. What happens after you fall back below after making this secondary attempt? That's when the market goes into these downward phases. So now we're back below. We are below this regression band. Okay. We're below and showing the signs of capitulation. All right. So this is why, just another piece of evidence that we're going to present and put forward that says we're seeing the signs of a bear market forming. Now, again, it doesn't mean it has to happen like it's happened in the past. Simply put, it's worth taking note of and, positioning yourself appropriately. Personally, I love times like this. I'm going to, just DCA as I always say I will, using the DCA index risk metric. I'm going to use that and DCA all through these times, and I will continue to do so, even if we come down to these levels. So again, as usual, the standard disclaimer, this is not financial advice. This is what I'm doing. I'm showing you the data that I'm looking at, the way that I'm approaching the market. And personally, when this is happening, these are dollar cost averaging opportunities for me. All right. So what I want to know from here is that's good information to know where our bottom may occur, and knowing just a point blank, last level of defense, buy as much as you can type level. Now we know where that may be. Let's look at where this upper band may be, which leads us into our final capitulation stage, like it has in every other cycle. So, it shoots up through this level, and that's pretty much you're on, prior before the peak comes up, you're looking at November 17, you have about a month. And then here, so November 13, you have about 2 weeks. So 2 to 3 weeks up to a month, typically, once you break above this level, is how long you have to your market cycle peak. Now, this cycle, it didn't quite happen like that because we had sort of an anemic run up once we finally did get above. But, even then in that situation, realistically, you had maybe a month or a month and a half. Okay. So let's take a look at where it may be in the future. So we'll turn on the forecast for, going forward. And let's look at that 4-year time period down the road. And this shows you that the upper regression band, and let me say, I do believe that typically the upper regression bands are going to be less trustworthy than the lower regression bands are. So, in this case, I do think this is stronger evidence than the price log regression band, but I just think because of the nature of the way that market cycle peaks work, in that they're blow off retail driven type events, they are less predictable and therefore less important. But I do think that this band is going to be more accurate than your, just going from data points at the actual market cycle tops. With that said, if we just bring this out and look into the future. So if the market cycle continued, where would our, the top of our band be expected to be in the beginning of 2023? And that would be $63,000. But remember, the top is typically not your market cycle top. So $63,000 would sort of be the level you hit prior to going into a breakout. This year, when we broke above, this level was at $30,000. In 2017, that level was at $6,000. If you go back to 2013, that level was $300. So it went up a total of about 4x after breaking through this level. It went up a total of about 3x after breaking through this level. And then it broke through and went up about 2x, which is interesting after breaking through this level. So, it would almost be interesting to see if in the next cycle, if whenever the market cycle peak occurred, if it simply got to that level and then sort of stalled out from there. I'm not saying that will happen, but it's at least worth taking note of. After breaking through this upper regression band, 4x, 3x, 2x, okay? So where would we be at 4 years down the road when we may expect, again, this all comes into heavy speculation because it draws into question the idea of lengthening cycles. Will the next cycle revolve around the halving? And I tend to think it will not, because as I've laid out before, the halving is becoming less influential on the entire market. But it's worth taking note of and worth knowing where that number might be. And that number is around 170,000, where 4 years from now, this upper regression band is, with the lower band sitting at around 58,000. So with that all said, guys, that sort of lays out a framework for you. So the last thing we can do is add in the actual price regression bands that we looked at the other day. And if you remember, so just removing those quickly, if you recall, these are our realized price bands. This is the price, the actual Bitcoin log regression curve for the actual price. And you can see how it's historically been very accurate at showing you kind of where the level of support is going to be at the bottom of the market cycles. And between these two bands, if you look here, these aren't just numbers I'm making up. We're using data here. Like you have a lot of other people using log regression bands, using fib levels and things like that. Okay, that's fine. These are actual data driven with hard numbers, looking at the actual amount of dollars being invested in Bitcoin. This is showing you the actual number of dollars being invested in Bitcoin. This is the lower regression band. The actual price of Bitcoin, if you only look at these non-parabolic phases, this is the regression band. And then finally, the upper regression band in blue for the actual price. So this gives you a framework for looking at the entire scope of where Bitcoin's price can be. As long as nothing fundamentally changes about Bitcoin, this is a great way of thinking where your potential upside for Bitcoin is, as well as your potential downside. Let's forecast it out and, arrive at a final conclusion. So if we forecast it out, this gives us an upper range and a lower range. And we can see 4 years from now, and I'll just leave it at this, in 4 years from now, a maximum upper level of potential of around $330,000 and a minimum level sitting at around, like we said before, $57,000, $58,000. And in between are the levels where, we've seen breakouts occur in the past. And then this orange level is typically the price, the lower level log regression curve for the non-parabolic phases of the cycle. And if you want to know where those are, that's at 170,000 here and 100,000 here, looking 4 years ahead. So what this is all saying, guys, is if you can keep your eye on the long-term perspective, in spite of whatever the price does in the short term, even if we head down to levels which are terrifying for you, if you can keep your eye down the road, down at these levels, looking at the log regression curve, using data, not emotions, not opinions. If you can do that, I think you're going to be all right. That's it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.